Good morning, trading world. It is October 21st, 2022, and this is my pre-market outlook and technical analysis for trading the markets. It's 7:47 a.m. on the East Coast. Let's get to the pre-market. Yesterday, I touched on the bond market and how it will basically play chicken with the Fed. Bonds continued lower into the close along with the SPY, which is cause for concern. I was looking for a deeper pullback coming on the 25th or 26th, but we may get a good chunk of it pre-market today. The 4-hour and the daily chart time frames are front and center today. I was going to be looking for a massive bull move to begin right after the open, but we must be cautious of a bull head fake and late morning or lunchtime drop. I was planning on closing a couple short positions right near the open and going long shortly after, but there are red flags about today that say think twice before going long or watch a certain threshold like that main channel because we could easily reverse at these points. Right now, there is not harmony between the quant side, which is bearish, and the technical side, which is bullish. Because of this non-harmony or dissonance and other factors, we could wake up or actually open gap down somewhere between 358 and 353. Well, I woke up, we didn't quite hit the 358 level, but we do have retail sales coming, and that could be a catalyst to push us the rest of the way down or spark us to that bull run or bull move that I was looking for earlier in the week. Now, for anyone who thinks, I guess kind of looking back to a pre-market where I talked about bottoms, the difference between a bottom and the bottom. For anyone thinking that this could possibly be the bottom, I don't see how, but if you have that mindset, one thing you can take a look at is scanning stocks for the number of stocks making new yearly lows versus the stocks making new yearly highs. I'm not going to go into that, but upon my scan this morning, the number of stocks making new yearly lows was at 67 versus 15 making new yearly highs or around new yearly highs. Now, in order for this bear market to be over, these numbers have to peak out. Stocks making new yearly lows, they have to peak, and that number has to start coming in and start evening out or trending in the other direction, getting closer toward that number where they even out. And as you can see, it is way outnumbered right now, lows versus highs. So if you continue to do that scan and you start to see the yearly lows start to trend in the other direction, which I don't even think we've quite peaked yet. So that's going to be one thing to pay attention to. From here, let me bring up the key levels of the day. All right, here we are back with the key levels to watch for today. Starting on the resistance side, we have our jack resistance at 364 to the 365 area. Queen resistance 366 to the 367 area, and then a large king resistance starting at 368 all the way up to the 376 area. On the support side, our jack support is at 363 to the 362 level. Queen support 361 down to the 360 level. And then our king support is 359 down to the 358 area. Going into the thesis, the main thesis for today is bearish, closing below the 365.41 with a projected target low of between 364 and 358. The alternate thesis is bullish, closing above the 365.41 with a projected target high of between 365 and 376. The current major channel we are in is 364 down to 353. The major channel above is 364 up to that 379 area. We do have dissonance between the technical side, which is bullish, and the quant side, which is bearish. Market strength and order flow very well could start at the bottom and continue up on the day. So that's going to be something that I will pay close attention to as far as market strength and where we are, whether we can kind of break out from the lows that we start at when it comes to market strength. Because if we start to break out of the lows that we start at, then we could take off in price action on the SPY. We could really begin to kind of take off and get that bullish move. But if market strength kind of remains sideways in its lows that it started at, we could really take off to the downside today. So that's going to be something very important to watch as we start the day. The weekly outlook, again, is bullish, and that's just us closing above the 357.63. The monthly outlook is bullish as well. And that monthly outlook still has us looking for a possible retracement up into the 390s. So this is going to be interesting these last few days. So let's get into the scenarios of the day. Give me a moment to bring those up. All right, here we are back with the scenarios of the day, and the first scenario and most probable, even though we're all over the place today, but the first scenario is going to be our trend day down. That would mean that we would open gap down away from the previous close and then start with a pop back towards that previous close We would find resistance on or before the previous close, then begin the downtrend for the day, better known as our golden window, the best time to trade. We find our midday chop around either the possible queen or king support levels. And then usually on trend days, we usually get a head fake to start the second half of the day, looking to continue the main trend of the morning. But at some point, we begin to, if it's a downtrend, we start to either make a small or sometimes a big rally into the close. So that's going to be interesting to see today. So that is our trend day down. With our trend day down, because of the report, retail sales, I have to put like a vice versa alert on the trend day, because we could get a way more pronounced move at 8:30 that could send us in any direction. And that pronounced move could look something like this. And that could give us or set us up to have a trend day up, where we would open gap up. We would start to kind of fade back towards the previous close, and then get our golden window, which is the best time to trade, or our trend up, and then find our midday chop around either the possible queen or king resistance area. Start off with a head fake, and then we could have kind of a fade into the close. So we have to be aware of this report at 8:30 that could kind of knock positioning off and kind of change the trajectory of the day. So that's our first scenario. Let's bring up the second. All right. Our second scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack of Queen resistance based on this report taking us up before the close. We find our midday chop around either the queen or king resistance before spending the same energy we use going up to come back down the second half of the day. I do want to give a vice versa alert, because it is very well that the news could not be accepted very well on the report, and that could give us a different trajectory, and we would continue lower after the cash open. Find our midday chop around the queen or king support area, and then start up the second half of the day with the same energy we use coming down the first part of the day. So that's our rounded reversal day type structure. And here we are with the last scenario, which is going to be our expanded range day structure. We could start to deflect lower based on the report, and at some point get to a low, start to consolidate, which could happen pretty quickly, and reverse and chop back and forth a little bit in the consolidation before taking off to the upside for the day. This is our expanded range day structure, which means basically at some point we're going to cross above or spend some time above and below the previous close. So today is going to be a wild day. So you have to be very careful in your risk, what you have on today, because we could very well see extremes on both sides of the tape today. And I like to caution every day, your most important job as a trader is to protect the capital that you already have. And we do that by knowing and understanding the risk that we have on in each position and managing that in accordance to our account size. And these last few weeks have definitely stress tested your risk, if that is not on the front of your mind in every position. I hope this helps, and as always, wishing you a positive trading day. Let's make it a great one.